Richard, let's get to it. What's your one big thing this week?
I'm going to bury the lead on this. So I'll announce the one big thing, three-quarters of the way through this little bit.
A slow reveal. I like it.
The anticipation is growing. So Saudi Arabia clocked its 14th straight month of non-oil private sector growth in October, and the non-oil private sector's output also grew at the fastest rate since the end of 2017. Consulting firm PwC said Wednesday in its latest Middle East Economy Watch that, quote, non-oil growth is a pivotal driver of this recovery. Sectors such as financial services have emerged from the pandemic in a position of strength. When looking at Saudi Arabia, its large pool of domestic demand and the government's commitment to the gigaprojects is central to spurring economic recovery. It adds the lifting of mobility restrictions, resumption of travel, and successful vaccination campaigns in Saudi have also been a key to the current positive outlook. The finance ministry said it expects the economy to expand 7.5% next year, which is the biggest surge in a decade. And that would be a particularly strong bounce back after gross domestic product contracted more than 4% in 2020 and grew an estimated 2.6% this year. So here is the lead. Despite this, the next 2 years projected spending, 2022 and 2023, is expected to be the same as planned. So that's about 955 billion reals, which is about $256 billion. And meanwhile, this year's budget deficit is expected to narrow to about $23 billion or 2.7% of GDP, which is significantly lower than the ministry's initial target of 38 billion. So despite increased oil revenues and a positive economic outlook, Saudi Arabia intends to keep spending restrained with plans to actually cut spending for the next 2 years before increasing it slightly in 2024. Monica Malik, chief economist at Abu Dhabi Commercial Bank, said sticking to earlier plans for 2022 and 2023 indicates an ongoing focus on fiscal consolidation. And then I have a note here, fiscal discipline, exclamation point. This is admirable, sticking to a plan. That typically when there's a hot bump in oil revenues, Saudi, has gotten a little more lax in its spending and just the discipline erodes. And this was very encouraging. And this is something that people are seeing in Saudi in terms of its fiscal management. That is a change. They're showing discipline, and it's a big thing. My one big thing this week.
Yeah, I'm not sure many people would use, if you were doing a word association exercise with Saudi Arabia, fiscal discipline as the first thing that comes up in mind. But I think also what's interesting in this and stuff that we're seeing coming out now is just how much the non-oil sector, as you mentioned, is growing. And that's the name of the game for Vision 2030, to try to get, even though oil prices are high, to try to get the non-oil sector humming so that if oil goes up, oil goes down, Saudi Arabia's economy keeps on humming, and it's humming right now. I mean, you said what, 7.5% growth?
Yeah, that's a big number. And that's even higher than I expected. Yeah, you're spot on about the private sector, because at some point they're trying to invest enough, change the regulatory environment enough, induce activity so it tips over, and there's a tipping point where the private sector really picks up. And as you say, that's fundamental. The government can only employ so many Saudis. The private sector's got to be the one to pick up the slack if they're going to meet their marks for Vision 2030. And I also should add, we're experiencing, I think the Saudis know we're experiencing a moment in the oil market. This little window here where it's bumped up to 85 is not going to last. You've got reduced production in 2020, followed up by increased consumption and economic activity this year. You've got shale oil sitting it out on the side right now, but they'll be back. They'll be back. I mean, the Saudis understand, I think, that the shale oil, U.S. shale oil, sets the ceiling. Saudis can manage the floor in terms of oil prices. So they're smart to be fiscally conservative, because this moment's not going to last.